I've been getting calls from all of our clients wanting to know what happened last week with the stock market, with tariffs, with the economy, and most importantly, mortgage rates. So I do what I did with every bad news, and I called my good friend Chris Junn. He's over at First State Bank, smartest guy in finance. And you talked me off the ledge. You explained a lot of things to me, and I said, this is great information that we should share with all of our followers, clients, agents alike. How's the day going today on this fine Monday?
Hey, it's a good Monday, Eric. How you doing this afternoon?
Yeah, not bad at all, man. It's been a wild ride. Big news hit. We'll just cut right to the chase. The news last week with the tariffs and the stock market's biggest crash in 5 years. Walk us through what actually happened, kind of the ramifications of that, and then open up your crystal ball and help us prepare our clients moving forward.
Yeah, they came out with, tariff rates that far exceeded, I think, what the market was expecting. So you subsequently saw a major sell-off in the equity in the stock market and kind of a flight to safety to U.S. Treasuries, which mortgage rates generally tie pretty close to what the Treasury rates do. So we saw a big sell-off in equities that subsequently carried over here into Monday morning, but markets have kind of been whipsawing back and forth here today. Really based off of, I think, some comments from Trump and maybe his willingness to negotiate on some of these tariffs. And I really think that's kind of the intentions of them. I think the administration would like to get a lot of these countries to the negotiating table and hopefully renegotiate what they feel is a fair trade deal for the U.S. But definitely a lot of volatility in the marketplace. For the average everyday person maybe watching this, invested in your 401k through your employer, kind of avoid the noise, I guess, is what I would say. Most people are looking at investing in that 401k for the long term, not from last Wednesday to Monday here today. So stay the course. Most people are investing long term. This isn't the first time it's happened, and it certainly won't be the last time that we've seen kind of a shock to the market like this. But definitely anticipate we're going to continue to see a lot of volatility in the marketplace. There's just a lot of uncertainty surrounding the trade front, the tariffs, what tax proposals and tax rates might look like going forward. So definitely anticipate we're going to see a lot of volatility moving forward, but some silver linings that we've seen on the mortgage side. There certainly is a lot of volatility in mortgage rates right now too, but we have seen a relatively kind of stable easing here the last few weeks, and that continued into late last week. They are kind of jumping a little bit here now this afternoon based off of some of the comments about Trump willing to negotiate maybe on some of the tariffs. So Treasury rates are climbing a little bit here this afternoon as we've seen some improvement on the equity side. So lots of interesting stuff, and certainly, for a state like North Dakota that is very reliant upon trade across the globe, whether it's on the the commodity side with a lot of our egg producers. Definitely something that we're watching closely, and folks in North Dakota should definitely pay attention to.
Yeah, absolutely. So many things to unpack there. First of all, tariffs, right? It sounds like a terrible deal. Lots of short-term pain for long-term gain. If we can get through the next several months of that and kind of unwind some of these, where do you expect tariffs to go, and what benefits would we have from those?
Well, I think ultimately what Trump would like to get to is hopefully a zero tariff policy. I think would be real nice. They're not charging us anything, and we don't charge them subsequently, and you have really a fair and open and free trade market. Will we get to that with folks like China? Probably not. But certainly when you look at the debt that the United States has accumulated, there's got to be some changes in some of these policies, and that definitely can impact the bottom line for the consumer. I mean, there's going to be some prices on things that no doubt go up. We've already seen that with some of our clients that were maybe looking at construction projects here in the Bakken. those contractors notifying our clients that, hey, if you're putting up a steel building, if you don't sign the contract by a certain date, prices are going up a certain percentage. So there is an impact to the cost of doing business, and I think that's really what you're seeing around the globe. Inflation expectations. You had Jerome Powell come out last week. Inflation expectations, if tariffs stay in place for a longer period of time, more than likely are going to have an upward trajectory in inflation expectations, and that can have an impact on GDP here domestically as well as across the globe, and the risk of recession certainly a little bit higher if those tariffs stay on for a longer period of time.
Heck yeah. Let's talk interest rates. Trump's been trying to get Powell and the rest of the Fed to lower interest rates, publicly shaming them in a lot of cases. That didn't seem to work. But the good thing about these tariffs and the slowdown of the economy, right, temporary slowdown, is interest rates really dropped. And we saw interest rates on a 30-year fixed mortgage were 7.25% not too long ago. And now we've seen those 6% and below, not 6 o'clock. Run us through where interest rates are now on a 30-year, and what does that do to someone's buying power right now that's looking at houses in our ever increasing market on a demand standpoint?
Yeah, so we saw them dip down, on a purchase perspective, depending on credit, how much you're putting down, but kind of that A+ bar where we saw 30-year rates around that 6% mark late last week. We are seeing a little bit of a jump here in the market today, probably more around that 6.25, 6 3/8, but that still is a significant improvement from that 7.25, 7.50 that we saw here a few months ago. So that really, I think, is that flight to safety to trade. You've got some money coming out of the equities, going into safe havens such as U.S. Treasuries, mortgage-backed securities. So money flowing into those instruments. The flip side of that is you've got some higher inflation expectations moving forward. So that's where you're kind of seeing a little bit of a push and pull between that flight to safety trade relative to inflation expectations. So I expect you're going to see mortgage rates probably will be fairly volatile, at least in the short term here. So if you're on the fence, stay in contact with your lender. If you haven't, locked, if you're under a contract, there may be opportunities where you see a little bit of a dip in the market to lock at a little bit better rate. On the buying power front, certainly as rates come down, that principal and interest payment is a little bit cheaper. So provided you've got the down payment, that's going to increase the purchasing power for folks out there that are looking at securing a house in the near future. So a lot of interesting things here impacting a lot of people here in Williston and certainly across the state and across the globe.
Heck yeah, well put. And we always talk about Williston being a game of musical chairs. We've been predicting it all winter as our inventory is a lot lower. Less than 3 years ago, we had 150 homes for sale in the greater Williston area. We're sub 30. And the ones that are sitting there for a while and getting days on market are some of the older ones or some of the ones that need a lot of work. But we've all been talking about how stuff just keeps trading at 102, 103, 104, 105% of asking price. Again, multiple offers, stuff's moving quickly. What can you talk to buyers about, specifically related to keeping their powder dry and getting ready in case they do find the house they want to make a move on?
Yeah, definitely. Number one thing, you want to reach out and get pre-approved because if you're not pre-approved, the amount of time that it takes to get your application documents in and get pre-approved, you might miss out on that deal. Inventory is still moving, as you know, pretty quickly around here, especially anything that's in that more affordable price point, call it $300,000 to $400,000 range. Like you said, multiple offers generally, and going over asking price in a lot of cases. So you definitely want to be pre-approved. So when you do find that house that you're interested in submitting an offer, you're ready to go when the time is right.
Excellent. Thanks for the advice on that. Last thing, no conversation in North Dakota is complete without talking about oil prices, right? They were in the 80s, slipped into the 70s. We lost $10 a barrel in just a couple of days of trading last week. What do we need to know about oil prices and how it affects us here in the heart of the Bakken?
Yeah, kind of hovering around that $61 a barrel mark for WTI. Typically here in the Bakken, you see even a discount to that due to logistical costs to get product to market and out of North Dakota. So something we're watching very closely. It's getting into that range where if it stays at prices similar to where we're at right now, or even slips a little bit further, I would expect maybe some of the oil and gas companies to maybe pull back a little bit on their plans, which certainly has an impact on the job market here, housing market, etc. What's really driving that drop in oil prices is expectations that we're going to see much lower demand for oil products based off of what we've seen in the stock market and the increased likelihood of recession being forecast by a lot of economists across the globe. Kind of a double whammy on top of that, which I don't think a lot of people saw this coming, but OPEC here recently announced a little bit of an increase in their output goal. I think it was around 400,000 barrels per day of increase. So, increasing supply coupled with likely a little bit weaker demand outlook certainly is having a negative impact on oil prices. The flip side of that, if you're a consumer, probably going to see lower gas prices. So help some of those folks with some of their everyday living expenses. So good and bad, just depending on which side of the equation you're on and how it impacts you. But generally for the Bakken, we'd like to see prices probably more in that 70 to 75 barrel price point rather than down here in the low 60s. People start to get a little bit uneasy and nervous if it starts to stay there for too long.
Sure, a lot of short-term puckering obviously up there. Summarize everything for us now. Bring us home here. Give us kind of your crystal ball analysis on where things are going, and then all of the top summaries if you could.
Well, I think the tariffs announced really are trying to use those as a negotiating strategy. There's a lot of countries, though, that those have been slapped on. So I think it's going to be a lengthy negotiation process, in particular with some of the larger trading partners, China and the European Union. So expecting a lot of volatility likely here in the weeks and months to come. Mortgage rates, I think, are going to be pretty choppy as well, but it's going to be interesting to see how Jerome Powell and the Federal Reserve acts. They're kind of faced with what is likely a weakening economy with increasing inflation expectations. So they're kind of boxed into a tough corner. But overall, I would say, don't panic out there. Things like this, we've seen them in the past, and we'll see them in the future again. So, but definitely stay on top of the news and position yourself how you feel is best based off of your individual circumstances.
Yeah, well said. And the best advice I have as a 15-year financial advisor back in the day, those investors that ran in when everybody else was running for the sidelines, the Warren Buffetts of the world, they're the ones that made the most money when things took off, especially in real estate. And we're in one of the few bright spots economically in the world because of our strong economy, our diversified industries now, right? We all know about the crypto. We obviously know that the data centers just got their approval as well in town, and we got Saralong coming up. So lots of jobs coming. Our housing market's only going to get tighter. If you have any questions, a good source is to check out our weekly newsletter. If you haven't been seeing that, we're sending those out every Wednesday, 10 a.m. Central Time. Really some good information and timely educational information in there. And then we also have a couple of other blogs that we've been sending out related to this topic specifically. But if that's not enough, if you're looking to find somebody that knows more about the financial markets, you're looking for a good loan, how do they get a hold of you over there at First State Bank, Chris?
Yeah, they can give me a call at the bank, 701-577-2113, and be happy to visit with them.
All right. Well, thanks so much, everybody, for checking this out. Make sure to look at Proven Realty ND for all of your real estate needs as well. We'd be happy to help you any way we can. And otherwise, thanks so much for your time today, Chris. Certainly appreciate it.
You bet. Thanks, Eric. Have a great day.
You too.